Hello and welcome to Morningstar. I am Francesco Lavecchia and today I am joined by Jelena Sokolova, equity analyst at Morningstar, and she's our expert of the world of luxury brands. Good morning, Jelena, and thanks for joining me today. So, Jelena, the first thing I will ask you is what kind of evaluation can we do for the luxury sector in 2022 in terms of company earnings, and what's your expectation for this year?
Hi, Francesco. Thanks for having me. Despite actually more challenging macro conditions, lockdowns in China, and also high comparisons from 2021, luxury demand held up surprisingly strongly in 2022. It was still driven mainly by the developed markets demand, but for 2023, I actually expect the developed markets demand to moderate quite substantially. But Chinese demand, which still remains well below the pre-pandemic levels, could provide another leg of growth.
Okay, so talking about the future of the industry, last week in our special report dedicated to the technology sector, we mentioned it live stream. Can you talk about this new trend and which companies do you think are best positioned to exploit not only live stream but new technologies in general?
Yes. So from a technology point of view, obviously, yes, some brands are engaged in live streaming now. They mostly partner with outside providers on that as they don't have their internal capabilities mostly yet. They are also dubbing in technologies such as gaming and NFTs to attract new digitally savvy consumer. I would still say that the leadership here remains elusive given the fast change in technology landscapes, and as 2 years of reopenings of the economies post-COVID has showed us is that brick and mortar is still the most important marketing and sales channel for these guys.
Okay, the last question is about the Italian companies we cover, Ferragamo, Moncler, and Prada. They had a negative year in 2022 in terms of stock performance, but they are still overvalued. So what's your expectation for these three companies and why we think they are expensive?
So at the end of 2021, we saw most luxury names as being significantly overvalued to our fundamental expectations, as we didn't expect a very, very sharp recovery post-COVID to persist, as it was driven, helped by such non-recurring items as savings during the pandemic when people couldn't travel and couldn't do all the fine dining, etc., and also payment checks in markets such as the US. Of course, in 2022, the shares have given up some gains, but towards the end of the year, the performance picked up again on expectations for swift recovery in the Chinese demand. So we think that some shares are starting to look expensive again. We think that investors are currently underestimating the risks to growth, notably from the developed markets consumers, which are now hurt by inflation and also weakened asset market prices in the last year, but also about the potential fragility of the demand recovery and reopening in China.
Okay, thanks a lot for your time, Jelena. For Morningstar, I'm Francesco Lavecchia.